We'll talk about it, Crypto Boss. We'll talk about it. Fair warning, my back is killing me, so we'll see how long this lasts today. To be fair, Elliot, this BC250s are a pain in the ass to set up. Like, either way, setting up the BC250s is rough. You heard Rabid? I don't know what you're talking about, low power. Good morning, B-More. What's going on, dude? Who's still mining Tari? I'm not mining anything but Bitcoin right now. I'm not even mining Bitcoin, actually, technically, until tomorrow? Tomorrow the 1st? Yeah, I'll start mining Bitcoin again tomorrow. Maybe we can talk about that. I don't know. I already talked about Tari last week, didn't we? Yeah, we did. I don't know if there's enough liquidity to really make a full-on mining tutorial on that yet. I know Rabbit already did one though. Stuff was saying. It all depends on how many you have, right? The argument's been that mining profitability shifted from GPUs to CPUs, but also if you're talking about Tari being a secret, if you look at nice hash revenue, I don't think it is. But who knows? What's up, Ozzy? Welcome to the stream. Ba-ba-bum, ba-ba-bum. Boom. Hello and welcome everybody, the Crypto Mining Morning Show, because it's the morning this time. Remember those? Where we talk about all crypto news from the perspective of a cryptocurrency miner. My name is Matthew in real life, and I go by Blind Run on the interwebs. And today we're going to be talking about SUI validators and that whole kerfuffle as far as, if you guys weren't aware, SUI was hacked and then pretty much it was reversed by the validators. There's a lot of argument over, decentralization and immutability, etc. When it comes to that in particular, we're also going to be talking about 93% of Bitcoin already being mined. Hold on. That coffee came up quick, so it is what it is. 93% of Bitcoin already being mined. What kind of effect that might have on the price of Bitcoin? Of course, Bitcoin's physical infrastructure is the industry's most overlooked asset. We're going to be talking about that as crypto miners. Getting the perspective of outsiders on that should be interesting. That is coming from Cointelegraph. It's an op-ed. And then we're going to be talking about Ethereum upgrades not boosting network activity, which I think, to be completely honest, is something that we've been talking about for a while. It really is turning into the institutional chain for DeFi and NFTs, etc. We're also going to be talking about mining Bitcoin at home and what Cointelegraph thinks that looks like these days. And I'll have a lot of opinions about that. And GameStop is purchasing over $500 million worth of Bitcoin. So I keep seeing GameStop's close down, and obviously they're just turning into a Bitcoin company a la, Strategy, MicroStrategy, now rebranded Strategy, and a few others, which, to be completely honest, I think is a net negative impact on crypto in general. There is a philosophy that I'll go over with you guys on that here in a little bit, but we're also going to be talking about BC250 BIOS, some options as far as that's concerned, and then we're also going to be talking about, let me move these over here. I need to move these. They're out of line. And then we're going to be talking about the Ergo update a little bit. And I need to get more information on this because there's a lot going on with Ergo right now, I think reflected in the recent price, especially as it's kind of acting opposite of the rest of the market. So we'll take a look at that. Going to be reacting to a video from Rabid Mining, hence why you guys heard that in the beginning. Specifically, he's saying crypto money is back and be ready for GPU mining. We'll see if that's true at all. And then obviously, like I said, talking about the BC250 options. And I think that's going to pretty much cover it today. Before we get into it, though, make sure to say hello in chat. It's good to see everybody here. Low Power Miner, welcome to the stream. Super Duper Builds, welcome to the stream. Ozzy, good to see you back. Ontario Miner. We got Crypto Mikal in the chat. Make sure you guys go give him a sub here on YouTube. Pure Crypto Boss, the Stick Shark, and Random Miner. So I think I got everybody. Oh, Hussein. There we go. Or Hussein. We're going like Saddam. I don't know. Anyways, let's get into it. SUI validators vote on 162 million Cetus recovery plan to restore user funds. Cetus may recover 162 million in stolen funds if the SUI community approves a governance vote with a full user fund recovery plan already in motion. SUI-based decentralized exchange Cetus may be one step closer to recovering funds lost in a recent exploit, pending the outcome of a community governance vote scheduled to end June 3rd. Cetus was exploited for over $220 million worth of digital assets on May 22nd. For those of you that are not familiar, it is a decentralized exchange, a la, I'm gonna draw blanks today. The unicorn one, Uniswap, but on the SUI blockchain, not on obviously Ethereum. And so that's what Cetus is at the end of the day. So if it's a decentralized exchange, there should be no takesies backsies, is what a majority of cryptocurrency advocates would claim, right? But in a May 27th post on X, SUI said Cetus had requested a community vote to approve the recovery of the frozen funds. So for those of you that are not aware, let's catch you up on that as well. SUI was hacked, as stated, for $220 million worth of digital assets. Well, Cetus was, right? The decentralized exchange on the SUI blockchain. What happened after that is the validators all got together and decided to freeze the funds. Now, obviously, this is going to... The elephant in the room here is that there is enough centralization surrounding the SUI blockchain that they are able to execute a freezing of funds. Because obviously, if you had a properly decentralized network, you wouldn't be able to coordinate the freezing of funds, right? That's the argument, right? The more decentralization you have, the less organization to do these sorts of things would be. That's a very basic way of explaining it. Obviously, there's more to it than just that, but that is pretty much what happened. So now we have these funds frozen, 162 million of the 220 million, because about 40 million, I guess specifically, what is that? 28, or no, more than that. I'm going crazy. 58 million. Is that right? Yeah, 58 million was liquidated through different mixers, etc., by the attacker. And so some of it did get out. 162 million of it did get frozen before it got out, which is a significant percentage being frozen. You couldn't freeze all of it, right? And so that's essentially what happened, right? And so then now we're here, and there are basically discussions about providing that $162 million back to Cetus, the decentralized exchange. So, quote, if the community vote is approved, the funds will be recovered from the attacker and held in a multi-sig trust account until they can be returned to accounts that had positions in Cetus, the post said. The vote is part of a broader recovery plan that includes using Cetus's treasury and securing an emergency loan from the SUI Foundation. The crazy part here too, and I assume part of the multi-sig will be some of the developers of the SUI network will have control over a part of the multi-sig wallets before it goes back to Cetus, and Cetus will have probably some tokens for the multi-sig wallet, that sort of thing, because trust in Cetus should be waning at this point, just from my perspective, from the attack. Because it's not like it was a phishing scam that targeted users directly. This was essentially an attack that hit the decentralized exchange directly, which is why without any user participation, they were able to liquidate $220 million out of the decentralized exchange. So this isn't an end user error issue. This is a decentralized exchange issue. And so, giving them the money back seems foolhardy, to say the least. Obviously, I guess you have to work with them so that you can get the records. I would assume if it's a decentralized exchange, my thoughts would be you would be able to use a scanner and give the money back without the interaction of the decentralized exchange, but they're going to be utilizing, I guess, Cetus to help in that. It's just like a lot of lost trust, right? So the ability of the SUI validators to freeze the funds has sparked debate within the community, with some users criticizing the centralization risk and others praising the rapid response as a positive step for security. And we talked about this a lot. Like, this is true in life, you know. You have to basically choose between, in crypto speak, you know, decentralization and security, right? And that is, you know, in real life, you might equate that to freedom and security. You know, the more freedoms you have, the less secure you are. The more security you have, the less freedom you have. And that interprets into blockchain as like, the more centralization you have, the more security you have, and the more decentralization you have, the less security you have, right? And that's kind of the game that you play. So, you know, if you are a, you know, cypherpunk purist, this just throws up red flags all over the place. You probably don't want to participate in a network that practices in this. And this is the debate within the community. I would say, from what I read on Twitter, it leans more towards people being opposed to the centralization risk, more than the positive step for security. The thing is like, obviously, if you lost funds in this hack, you're going to be biased, right, to be praising the rapid response and positive step for security because you've lost money. And it does beg the question, like we always talk about, not your keys, not your crypto. We presume that, you know, in a decentralized exchange, that you still have control over your keys, and those are contracts, you know, within your wallet that you can control. And we say, you know, stay away from centralized exchanges, but there's been, you know, obvious, problems here now, obviously arisen with decentralized exchanges, excuse me. So, you know, it's one of those things, anytime you're trying to put your crypto to work, there's a certain amount of risk, right? And it seems to be that the harder you try to make, you know, your cryptocurrency work for you, whether it's through decentralized liquidity pools or some sort of staking, etc., the higher your risk goes up. And it's almost as if the best idea is to just throw it in a wallet that you can control and never attach that wallet to any, you know, decentralized platforms or DeFi or any exchanges whatsoever, you know, and only put into those particular applications something that you're willing to lose, right? And like we've talked about that before, like obviously you want to have 3 sets of wallets, you know, you want to have your cold wallet, preferably paper only. And then from there, you want to have, you know, a warm wallet, you know, something like a hardware wallet that allows you to transfer, you know, those funds from the paper wallet, you recover with the hardware wallet, and then you send that to a hot wallet. And then obviously you have to regenerate a new paper wallet, send the remaining funds over to that sort of thing. But you want to have that 3-step process, right? You want to have a fully cold wallet, you want to have, which is going to be rotating all the time, because anytime you recover it, it's not cold anymore, right? Just to be clear for anybody not understanding that. And then you want to have your warm wallet, which can be completely disconnected at any given time, but you can connect and move funds with. And then you have your hot wallet. That's the one that's going to interact with decentralized exchanges. You're going to send and receive funds with, that sort of thing, right? And I think it's even more paramount to understand that basic functionality more than ever right now. And unfortunately, some of the things I've seen coming from, you know, the Bitcoin conference over the past week has been a push to get rid of private keys, let third parties manage your crypto, that sort of thing. And dancing cows. What a grotesque conference. Just in general, lost the plot. It's a bunch of only fangirls, KOLs, and retards running around yelling number go up. And I think we deserved the pullback on Bitcoin after that display of degeneracy. That's my humble opinion, but it is what it is. It was ridiculous. But, you know, not your keys, not your crypto, I think is still valid to this day. Having a 3-part setup for your crypto funds is extremely important, and lean heavy with your investments into the paper wallet, the cold wallet, right? Lean heavy on that side. Almost like an 80-20 rule, right? You throw 80 into the cold wallet, risk the 20, something like that. And then, you know, you should be okay. But it's just getting nutty around here, especially with like, I know a lot of KOLs are pushing all of the new staking platforms once again, which, by the way, historically have all collapsed. So, like, I don't care if it's, you know, Islam approved, right? Or whatever term you want me to use. I don't care if it's Jesus Christ approved. Staking platforms lose money and collapse 99% of the time, and everybody loses their initial investment. So I don't trust those still. You know, the pushing of cloud mining again, those have always failed 99% of the time. We're seeing history repeat itself. Now, obviously, history doesn't always repeat itself. You know, it rhymes. I get that. I understand that there could be something new that comes that's trustworthy. I just, like, if it's the failure rate's too high on these things for me to get behind, right? I just don't get it. I understand from the KOL perspective that you're trying to generate revenue. So you're going to, you know, obviously push those things that give you some sort of payback, whatever. I'm not going to do it, like I said, because I don't trust it. It's funny to me that it's the same thing that we've seen over the past 4 cycles. It's the exact same thing, right? Over and over and over again. So regardless of the vote's outcome, Cetus said recovery process would begin immediately. The protocol plans to publish a detailed plan outlining next steps for affected users. So we'll see where they go with this. Obviously, they already have the funds locked. So in this particular situation, it's going to come down to whether or not they or how they handle the funds, right? So the multi-sig wallet, like I said, I assume that means they're going to reestablish trust over the control of those funds by not just giving it all to Cetus, because there should be some lack of trust due to the hack, and you'll have, you know, somebody part of the SUI Foundation that has control over, you know, one of the keys for the multi-sig wallet. That's kind of something I expect. How they're going to come up with the 58 million additional missing, you know, to make investors whole, I'm not sure where that comes from. If that just comes from you know, some sort of the SUI Foundation's pocket, I guess potentially. So, you know, thereby probably devaluing the price or potentially increasing the price. I don't know where that goes necessarily, but it's definitely going to lose some faith, I think, in the crypto market. So, what's up, Skilo? Welcome to the stream. We got Kazi saying, how about Radiant? Obviously, Radiant never got the ASIC miners from Bitmain. And so it definitely turned into, and obviously we had that heated debate with the community lead on Radiant that's live on this channel. You know, I called them out for, you know, the practices of working with the ASIC manufacturers on the background. The fact is Radiant completely lost the trust of the public, and deservingly so. And yeah, Dragon Ball, like Squirrel said, killed Radiant. Dragon Ball and the Radiant developers and community members that were knowingly working with Dragon Ball. That's what killed it, right? And deservingly so. You know, and I had high hopes for Radiant because of the mintable token system with GPUs. I thought, you know, that's a way to add, you know, inherent value or intrinsic value through mining to the token system, to DeFi. And I thought that was a really good idea. Unfortunately, you know, the foundation was built on sand. And when the foundation is built on sand, that's what's going to happen, right? And there's nothing we can really do about it except say, well, that one failed and we got to move on, you know? And it is what it is. I guess there's always still potential for recovery, and maybe we'll see that at some point. Like, obviously Radiant has some good ideas, but that's a big thing to ask people to get over, right? Like, we were actively working with ASIC manufacturers to mine behind everyone's back. And when they released it, those same ASIC manufacturers that had been mining also dumped the coin on the public once they were, well, obviously done getting their pre-orders in for the ASIC equipment. And it's the perfect example. It's an accelerated perfect example of the negative impact of ASICs on any proof of work network, right? It's funny because it's funny because they got caught, right? Like, we can't explicitly state, you know, I can't explicitly state that the $8 million funding round that went into mining hardware in the early days of Caspa is not the exact same thing, for example, right? Like, I can't, like, because it kind of is. They just didn't get caught, and they conveniently lost the portion of the blockchain that had records of that. So to me, like, it's hard to like go through all of this and be like, you know, not see the hypocrisy in the markets, I suppose. And kind of the reward of the liars, which is pretty much like a ton of the crypto market is like the unethical, immoral individuals seem to benefit the most, the quickest, right? And it's disappointing to see. And I think that's why I think that's where the radicalization of like the Bitcoin maxi comes from, right? I think we've seen that clearly over this cycle too. Where we have seen just a ton of people move into that Bitcoin maxi standpoint, where even the GPU miners, the FPGA miners, you know, the other ASIC miners, like even Marathon Digital, which is mining Caspa, they're just liquidating their Caspa into Bitcoin. Everybody's taking their profits from the altcoin mining and dumping it into Bitcoin, and then being like, why isn't there any altcoin season? Well, you're immediately selling it for Bitcoin. So no shit, that's what's going to happen. And the reason that's happening is because there's a lack of trust in the people that are managing these networks, and deservingly so, right? And then it just comes back to the old adage that like Bitcoin doesn't have the people problem, right? And so when you don't have that people problem from you know, developers, etc., and you have that fully established decentralized network, you're a lot safer. And that's why people are moving and dumping everything into Bitcoin. That's why we're not seeing the same strong altcoin performance. On top of that, you know, the first altcoin run up this bull cycle was obviously on Solana and into meme tokens, and all of those collapsed and scared everybody off, right? It's just the way it is. And I think, I just think that's the biggest problem that the altcoin market faces outside of the Solana issue, right? It really is that, you know, everybody I talk to, they're like, yeah, I'm mining and then putting my profits into Bitcoin, right? Everybody's doing that. And then on the same flip side, then they complain about there not being an altcoin season. And it's like, well, duh, you know, it is what it is. I know Scott's saying we need to develop an L1 proof of work with ethics. Like, good luck on that. The first thing ethically that I think you have to do is go completely anonymous, right? The fact of the matter is like, if I was to do it, you wouldn't know I was doing it. Because the only way you are successful in that path is by following to the T what made Bitcoin successful, right? And I think without that, it's hard to move forward. The problem that Bitcoin has, right, it is also caused by its greatest feature, which is changes are slow, right? Innovation within the Bitcoin network is slow. And that's just the way it's going to be for a long time. You know, that's the way it will always be. But that is why it's successful too. But we'll have to go from there. Well, B-More says Dynex was anonymous. Yeah, it was anonymous, but it was controlled anonymously, right? So there's a big difference between controlled by the decentralized network or anonymously controlled by one party. That's a huge difference, B-More, right? Like a huge difference. And then Christian says, I thought the unofficial coin of SOAK community is Wart. Obviously, Wart's had quite a few issues and made some very poor decisions that we have covered on the channel, right? But unfortunately, that's every currency out, and you have to give some sort of leniency because at the end of the day, there is the understanding that the human factor is there and humans are going to make mistakes, and that you have to give them enough leniency to be able to correct those. I mean, like, point in case, I guess I would say, like Ergo with taking over the Ethereum Classic Twitter. You know, I made a big stand on that and stuck to it. It took a year for them to reverse that, but they did reverse that, right? And you have to give people that opportunity to correct their mistakes. Yes, and every dev team makes bad decisions. I've made bad decisions. All of us as humans have made bad decisions, and we have to give people the grace to be able to recover from those, right? At the end of the day. Now, I guess I'm waiting on groceries to get pulled in, so we'll keep talking to chat, and then we'll get into the next topic in a second here. So community invests in silicon, not coins. Yeah, and that didn't work out too well either this time around, right? So when we ended up, you know, I bought a bunch of the S19s. Those have not quite gotten to the point of making up for the increase in cost of the actual energy cost to mine with them. So that turned into not the best investment, not the uptick. It's similar to, and that would be a great question, right? Is like, would it have been better to put the money into Bitcoin or into, you know, old miners? I think at this point, like, obviously, if you took the snapshot right now, and you looked at when I was buying miners, say when Bitcoin got all the way down to like 14,000 or something like that. If I would have taken, like, let's say it was 10 grand, you put 10 grand into miners at the time, you maybe get what, like I'm trying to think back then, you would have gotten 20 S19s, something like that. And, or you would have gotten 2/3 of a Bitcoin. And the value of the S19s, while up now, aren't really up that much. And new equipment's obviously coming out nonstop. But if you would have been in Bitcoin, it would have been higher, right? So I think the mining game is getting extremely more difficult at this point. I think for me personally, sticking to GPUs would have been a better plan. Obviously I think I spent the same amount on GPUs as I did on ASICs, but either way, I think both of them are struggling. GPUs luckily held their value, but only the top end GPUs because of AI. And I think that makes things a little bit more friendly towards the GPU investment perspective, right? We'll just have to wait and see. Like Stan says, like if Bitcoin price was higher, the S19s would be better. Like if the Bitcoin price had followed previous cycles and we were above that $200,000 mark, obviously S19s would be providing plenty in comparison. But I mean, that will lead us like into the next topic, which is like how much Bitcoin is left to mine. And this has an impact on, Bitcoin price at the end of the day, because there isn't as much left to be mined. And the idea initially, with Bitcoin in particular and all the, follow-up proof of work currencies that did decide to go with supply cap was, as less of the asset is able to be mined, the higher the price of that would go. But I think we're seeing the opposite effect. And I think it's accelerated on Caspa. So I think if you want to see what's really interesting, if you want to see long-term Bitcoin price performance, you might want to look at Caspa because of the accelerated timeline, and it might give you an idea. Because what happens, right, is that once you get over that 90% of whatever asset is mined, the impact of miners on the price of the asset is lessened significantly. And that's what we're seeing with Bitcoin, right? We're seeing the impact of miners on the price of Bitcoin be stripped away. And so miners are just not as relevant, I think, on the network as they used to be. And that's because a majority of the asset is in the hands of the holders. And the holders, like I always say, you can only make so many millionaires before someone decides to realize that they're millionaires in fiat. And when they do that, the price goes down. And that is what happens when a majority of the supply is not being provided by the miners anymore. So as of May 2025, 19.6 million Bitcoin have been mined, or about 93.3% of the total supply. That leaves roughly 1.4 million Bitcoin yet to be created, and those remaining coins will be mined very slowly. The reason for this uneven distribution is Bitcoin's exponential issuance schedule, governed by an event called the halving. When Bitcoin launched in 2009, the block reward was 50 BTC. Every 210,000 blocks, or approximately every 4 years, that reward is cut in half. Because the early rewards were so large, over 87% of the supply was mined by the end of 2020. And that's the big thing. What shifted in 2020 was this, the expected increase in price of Bitcoin compared to fiat, right? That's what's changed. And what changed before that right, was the amount of influence the miners had on the price of Bitcoin. So each subsequent halving sharply reduces the rate of new issuance, meaning it will take over a century to mine the remaining 6.7%. According to current estimates, 99% of all Bitcoin will have been mined by 2035, but the final fraction, the last Satoshis, won't be produced until around year 2140 due to the nature of geometric reward reduction. This engineered scarcity combined with an immutable supply cap is what draws comparisons between Bitcoin and the physical commodity gold. But Bitcoin is even more predictable. Gold supply grows at around 1.7% annually, whereas Bitcoin's issuance rate is transparently declining. And that's due to technology, etc., getting better at mining gold and being able to dig deeper, etc., right? Like that's kind of how, like gold, I don't think Bitcoin and gold is a good comparison because the mining process is completely different. You can say, well, there's a finite amount of gold, and that's fine. The difference is that gold, as technology gets better, there's more available gold, right? So as technology improves, more gold is available. And eventually, right, when we're mining in space, there is effectively an infinite amount of gold. So once technology is to the point to where it can, go outside of what's available on this planet, then obviously you end up with this theoretical infinite amount of gold. And that's just dependent on technology at the end of the day. I think it's a completely different asset at the end of the day. I mean, if you're just theoretically thinking about it, right? Estimates from firms like Chain Analysis and Glassnode suggest that between 3 million and 3.8 million Bitcoin, roughly 14 to 18% of the total supply, is likely gone for good. That includes high-profile dormant addresses like the one believed to belong to Satoshi Nakamoto, which alone holds over 1.1 million Bitcoin. This means Bitcoin's true circulating supply may be closer to 16 million to 17 million, not 21 million. And because Bitcoin is not recoverable by design, any lost coins stay lost, permanently reducing supply over time. Now compare that to gold. Around 85% of the world's total gold supply has been mined, approximately 216,265 metric tons, according to the World Gold Council, but nearly all of it remains in circulation or held in vaults, jewelry, ETFs, and central banks. Gold can be remelted and reused. Bitcoin cannot be resurrected once access is lost. This distinction gives Bitcoin a kind of hardening scarcity, a supply that not only stops growing over time, but quietly shrinks. As Bitcoin matures, it's entering a monetary phase similar to gold. Low issuance, high holder concentration, increasing demand side sensitivity. But Bitcoin takes it further. Its supply cap is hard. Its loss rate is permanent, and its distribution is publicly auditable. This may lead to several outcomes: increased price volatility as available supply becomes more limited and sensitive to market demand, higher long-term value concentration in the hands of those who remain active and secure in their key management, and a premium on liquidity where actually spendable Bitcoin trades at a higher effective value than dormant supply. In extreme cases, this could produce a bifurcation between circulating Bitcoin and unreachable Bitcoin, with the former gaining greater economic significance, particularly in times of constrained exchange liquidity or macroeconomic stress. So what does Cointelegraph think will happen when Bitcoin is finally mined? There's a popular assumption that as Bitcoin's block rewards shrink, the network security will eventually suffer. But in practice, the mining economy is far more adaptive and much more resilient than that. I don't agree that it is more adaptive. I think that security will suffer. The fact of the matter is Bitcoin miners make money one of two ways. One is obviously the block reward, which is the big one, which is decreasing exponentially every 4 years. And the other one is transaction fees. And the further along we get, right, ever since past 2020, the amount of transactions on the Bitcoin network are decreasing significantly, which means miners will have no incentive to continue to mine Bitcoin because there'll not be enough fees, and they'll have no influence over the price because 100 or 98% or whatever will already be mined, and the price will be controlled by the consuming market, right? And so if the price is controlled not by the people that are producing the Bitcoin or the security, and the security is not paying enough, it only goes to like obviously show that eventually miners will just turn off, because that's what we see when miners are not making money, they turn off. Now the difficulty will adjust back down, and that'll be fine. And we have till 2140 before that full realization happens. But by 2035, we'll probably understand the effects of this, right? Yeah, and like chat says, like a big problem, like a big impact is the ETFs, which is just paper trading of the Bitcoin. The Bitcoin never has to move on the blockchain, so no fees are generated. I talked about this on Twitter the other day too, because this was brought up in some old Bitcoin forums. I need to go find them again. It's like I'm running all off of memory on this, but it was brought up, like, what if the government or corporations do buy all the Bitcoin and just hold it, which is effectively what like a BlackRock ETF is doing, right? BlackRock holds all of it. It's not moving. So what happens to the price of Bitcoin? What happens to Bitcoin when that happens? Well, at the end of the day, Bitcoin was designed to be a currency. And if it's not being utilized, then you reduce the demand, right? Because there ends up being a point where the intrinsic value disappears because the energy consumption is not worth it and people turn off. And therefore, the value of Bitcoin, which is based off of the energy cost to produce the Bitcoin, is removed by the fact that people aren't using it, right? Like, it gets to the point to where Bitcoin has to generate its value from its use, because its value is directly tied to the energy cost to produce. So if everybody holds all their Bitcoin and never spends it like retards, which is what they're doing, then the price of Bitcoin will be suppressed further and further, because the value of Bitcoin is based off of its actual use, because the value is derived from the energy to produce the transactions on the network, which is like a crazy revelation that I think we haven't gotten to, and I think we're starting to see the beginnings of that happening now. And this idea that you're just going to buy it and everybody's going to hoard it and hold it is the actual idea that will decrease the valuation of the asset itself. You see what I'm saying? Because the original argument, the anti-Bitcoin argument, is that it has no intrinsic value. The argument against that is that the intrinsic value is derived from the energy cost to produce. But if there's not any energy cost to produce or to secure the network, because it's not needed, because there's no transactions on the network, because everybody's buying and holding and never selling it, then the thing that gives the intrinsic value to the Bitcoin disappears, which means then the value decreases for the asset itself. And sorry for saying the R word. I was getting a little passionate. You guys know I get out of control a little bit. It is what it is. I'm not sorry, actually. I'm not sorry at all. But hopefully that theory makes a little bit of sense, because I've been thinking about it a ton lately. Anyways, let's see what they say, because I completely disagree with one. I disagree with the comparison to gold. Now for different, like, I agree from the fact that they're not equal or the same thing. I disagree on the reasons why, right? I don't agree on this idea that Bitcoin miners are adaptive and resilient enough to withstand the control of the price moving into the hands of the holders, right? I don't think Bitcoin miners are adaptive enough to do that. Now, things that will help with this is, technology improving enough to reduce the energy cost to be reasonable. But once again, what happens to Bitcoin when you reduce the energy cost to produce it? It has less value because that's where the value is derived from, right? And so it says Bitcoin mining's incentives are governed by a self-correcting feedback loop. If mining becomes unprofitable, miners drop off the network, which in turn triggers a difficulty adjustment. Every 2016 blocks, roughly every 2 weeks, the network recalibrates mining difficulty using a parameter known as N bits. The goal is to keep the block time steady at around 10 minutes, regardless of how many miners are competing. So if Bitcoin's price drops or the reward becomes too small relative to operating costs, inefficient miners simply exit. This causes difficulty to fall, lowering the cost for those who remain. The result is a system that continually rebalances itself, aligning network participation with available incentives. So the question is, obviously, like I said, what happens when participation is at an all-time low in the middle of a bull market? Well, this is what we have, right? This mechanism has already been tested at scale. After China banned mining in mid-2021, Bitcoin's global hash rate dropped by more than 50% in a matter of weeks, yet the network continued to function without interruption, and within a few months, the hash rate fully recovered as miners resumed operation in jurisdictions with lower energy costs and more favorable regulations, also known as VPNs, in case you were wondering. Critically, the idea that lower rewards will inherently threaten network security overlooks how mining is tied to profit margins, not nominal Bitcoin amounts. As long as the market price supports the cost of hash power, even at 0.78125 Bitcoin per block post 2028 halving or lower, miners will continue to secure the network. Yeah, the question is will that market, my argument, because this is what they're missing, my argument is, the market price will not be controlled by the producers of the Bitcoin. The market price, because we're past that 90% mark, becomes controlled by the people that hold the Bitcoin, right? And as they hold it and don't spend it, they reduce the value of the Bitcoin because the thing that gives value is the energy cost to produce it. That would be the naysayer's perspective, right? I'm obviously playing hardcore devil's advocate here, but in other words, it's not the absolute reward that matters, but whether mining remains profitable relative to cost. No shit, Sherlock. And thanks to Bitcoin's built-in difficulty adjustment, it usually does. But obviously that's waning now, because easy predictions are that we would have at least once gone over 200K in this cycle already, and we're half of that. Right, we're half of that. So it's not proving out to be true, right? There are other factors, yes, like the efficiency of the miners themselves, reducing the cost to mint Bitcoin is definitely one of those. Is it as impactful? No. So even a century from now, when the block reward approaches zero, the network will likely still be protected by whatever combination of fees, base incentives, and infrastructure efficiency exists at the time. But that's a distant concern. In the meantime, the current system, hash rate adjusts, difficulty rebalances, miners adapt, and remains one of the most robust elements of Bitcoin's design. So the future of Bitcoin mining is energy consumption. I would agree with that base statement in the title. It's a common misconception that rising Bitcoin prices will drive endless energy use. In reality, mining is constrained by profitability, not price alone. Yes, it is a multifaceted thing, right? So they go on to say, as block rewards shrink, miners are pushed towards thinner margins, and that means chasing the cheapest, cleanest energy available. Not always the cleanest, okay? Like, we have to be honest about that. Chinese miners are not chasing the cleanest energy available. Okay. Like clean energy where incentives are aligned. I think I think a caveat is extremely important here. Like, let's not be delusional and be like, it's always clean energy for Bitcoin mine. No, that's not true. It's always cheap energy. Yes, that's true. So since China's 2021 mining ban, hash rate has migrated to regions like North America and Northern Europe, where operators tap into surplus hydro, wind, and underutilized grid energy. According to the Cambridge Center for Alternative Finance, between 52% and 59% of Bitcoin mining now runs on renewables or low emission sources. Regulations are reinforcing this trend, with several jurisdictions offering incentives for clean powered mining. And that's why I'm saying, like, obviously regulations that are offering incentives for clean powered mining is good. I don't like that they're penalizing fossil fuel operations. I don't know where that's happening at completely. Like I said, China's a great example of, like, they're chasing coal right now, right? Moreover, the idea that higher Bitcoin prices will always mean higher energy use misses how Bitcoin self-regulates. More miners raise difficulty, which compresses margins, capping energy expansion. Renewable-based mining brings its own challenges, but the dystopian future of endlessly expanding fossil fuel hash power is increasingly unlikely. I think so here's where I would agree. I would say I think that I hear a lot more the trend of I'm building solar panels to mine with at the house. But that's not happening at scale, right? So that happens in the GPU mining space, etc. But, not at the scale of, like, a Marathon Digital, is what I'm trying to say. Sorry, brain fart. So I'm going to address the elephant in the room. As far as the BC250 news, homeboy put that in the title. I saw it today. I have some. We'll talk about it. I don't have a ton. I have some suggestions, some things I've been doing. We'll talk about it. But it's nothing that's going to make you money right now. So, it depends. It can, but we'll talk about it. So, let's talk about Bitcoin's physical infrastructure as the industry's most overlooked asset. So as Bitcoin aims to go mainstream, the crypto industry's blind spot in terms of physical infrastructure is holding it back. Neglecting real-world access points risks leaving millions behind. So a new proposal to install Bitcoin ATMs in federal buildings highlights an important question. Can crypto truly go mainstream without a stronger physical presence? For years, the industry has focused on software and decentralization, but its reluctance to invest in real-world infrastructure is starting to show. Without physical access points, crypto risks becoming an exclusive insiders-only system rather than open alternative it's set out to be. I'm not understanding... So they're saying physical access points like Bitcoin ATMs need to be like, okay, no. This doesn't make any sense. Let me tell you why it doesn't make any sense to me. Okay. Like, if we're talking about physical infrastructure like ATMs, it's like everybody has a computer. Like, that would be like saying Netflix lacks physical infrastructure. No, I don't need to go to a kiosk to get a Netflix movie. Like, are these guys stupid? Like, everybody has a cell phone. Like, why do I need a Bitcoin ATM? I have a cell phone. I guess so you could put cash in, but this doesn't make any sense to me. Everyone loves to talk about decentralization. There's a good reason behind it. It defines the movement, shapes the technology, and supports the vision of a better financial system. While the industry focuses on code and algorithms, it lacks something basic. A decentralized system that exists only online is not genuinely decentralized. I'm about to stop reading this. Did I run into retardville? What is happening? Who wrote this? Scott Buchanan. I thought I was going to talk about mining, to be honest with you guys. And this just went like awesome, weird Bitcoin decentralization needs Bitcoin ATMs. Like, what are we talking about? No. The only reason you need Bitcoin ATMs is to onboard fiat. The end goal of Bitcoin is to not have fiat at all. And you don't need access to a Bitcoin ATM when you have a cell phone. I'm done with this. We're not reading it. Buchanan's a retard. I'm done. I can't do it. I got to stop saying retard today. I don't know where that came from. I've been watching too many bad influencers getting me into saying that word. We're going to cut it out. I got it. I'm going to clean up my language. I love how now, have you guys noticed too? I'll show you guys. I have to scroll. Let me see if I can find it on here. So CoinDesk has started doing AI generated articles. And so whenever I'm doing research for the show, now I have to I start reading it. You can kind of tell it might be AI. And then I scroll down to the bottom and will find that it'll say either partial or the entire article was written with AI. And dude, we're going, something weird's going on, man. It's just not nobody can think for themselves. Now when I get into a debate with somebody, they start asking AI. I'm like, can you not think for yourself? And you're asking something that has been proven to give the wrong answers. It is idiocracy coming to fruition. Yes, as mentioned in chat. That is what's happening. It's like, if I have a theory and I bring up that theory and then someone disagrees with it, they immediately ask some computer-generated AI algorithm. And then the problem is that AI, tangent on AI. AI is you know what the best thing AI can be used for right now is confirmation bias. You can get AI to give you whatever answer you want by asking it in a way that confirms your bias. And whenever somebody comes in and starts arguing with me using AI, I immediately label them as not intelligent. Because if you mess with AI long enough, you already know the fact that you can get it to generate whatever you want, right? And there's one thing about technology that's been scary from the get-go. So the internet in general, right, so the internet has created this space where people can confirm their bias in little pockets, right? And people call them echo chambers, right? Now it gets worse. So that was bad, right? Because you have social networks that people create their echo chambers in, and they have a certain amount of humans within that echo chamber. They don't go outside that echo chamber, and they, repeat this babble to each other, and they confirm their biases. And then whenever something from the outside of that bubble maybe makes its way in, they all attack it, and then it goes away. What AI is creating, which is scarier, is AI will allow us to create echo chambers of one. So hear me out. So we have our AI interactive group. You have your own personal AI. You're in that AI. You confirm all your biases within that AI, and it's an echo chamber of one. You now confirm all your biases within AI between you, one human, and one AI. And you have no checks and balances to say, hey, maybe that's wrong. And anytime somebody comes into your now one person bubble, you attack it with the AI, and you don't address any other thoughts or ideas. It is dystopian by nature, and it's something I've been watching evolve over the past, year or two, and it's pretty crazy. It's pretty nuts, dude. And yeah, and then there's the arguments with people that aren't even real, right, Ozzy? It's crazy. But think about that. Be very careful. It was already like you had to warn your kids about, these social echo chambers online. And now we're going to have to be like, okay, now we have these AI echo chambers where you're the only participant. It's crazy. Anyways, tangent over. So Ethereum had their Petra update. We covered it not too long ago. Obviously, biggest complaint about Petra, they increased the maximum amount of Ethereum per node, which essentially effectively centralizes the network more. Reason being is the big complaints they were getting was from institutional investors staking Ethereum. Okay. This is prior to Petra. So institutional investors, like, let's say you're getting ready to spin up an ETF at, BlackRock, and you want to get the staking fees. Well, as it sits right now, the maximum allotted amount of Ethereum you could put into a single node, validator node, would be 32 Ethereum. And so institutional investors were complaining about this because obviously they want to build one big staking node and earn the same rewards that the 32 is, proportionally. So Petra enabled this. What that effectively ends up doing is centralizing the network more. So the same problem Bitcoin has from ETFs generated in a different manner, in a proof of work manner, which will theoretically self-adjust because it was done so that way, won't adjust in this particular manner, in a proof of stake manner. And there's an incentive to consolidate all of those Ethereum validator nodes, meaning we will have less validator nodes, which means less decentralization, etc. So that is the biggest problem with the Petra update that I see personally. But, that is coming from Ethereum's courting of institutional investors. Now, is it working, right? Because obviously they want to court the institutional investors to increase the price of Ethereum. So then you say, well, is that working? And the answer to that is kind of funny because what is the thing that's happening? Network activity has not been boosted. Well, obviously. So I always like these articles because I just gave you the answer to why that's happening. If you increase the validator node maximum amount of Ethereum that can go into a validator node, you decrease the number of participants. All Ethereum has been doing for the past 8 years is decreasing the amount of participants on the network. The reason why Ethereum did so well last cycle was because there were a lot of mining participants that were reinvesting back into the network. And then they moved to proof of stake. And the cost of entry was 32 ETH, reducing the amount of participants on the network. And now they're courting institutional investors and increasing the amount of Ethereum that can go into a validator node. So what happens? You decrease the amount of participants. What did you think was going to happen? It's common sense. And you know what happens when you decrease the amount of participants? You decrease the amount of network activity. You decrease the utilization of the network, which will have a direct impact on what? The price of the asset itself. Neither the number of transactions nor active addresses has increased significantly following recent network upgrades. The Ethereum blockchain has yet to see a significant increase in activity despite successful upgrades, investment bank JP Morgan said in a research report. Neither the number of daily transactions nor the number of active addresses saw a material increase post recent upgrades, analysts led by Nicholas I cannot say, I'm not even going to attempt that name. If you're just listening, the name is PANIGIRTZOGLOU, wrote in the Wednesday report. Still, total locked value, which is TVL on Ethereum, increased between Dencum upgrade in March and the Pectra earlier this month. Obviously, duh. This is happening on all networks, by the way. Total locked value, like the holding, right? And obviously it's going to increase. Why is it going to increase? Well, that's what the network upgrade is directly incentivizing, right? The network is incentivizing you to do what? Hold more Ethereum in a single validator node. That's like everything's incentive structures. Like our whole entire world is incentive structures. If you incentivize people to hold more Ethereum because they get paid more in Ethereum for holding more Ethereum, they're going to hold more Ethereum. The problem is that has negative impacts on the use of the network down the line, right? Like it's all common sense though. It's crazy. So, but the increase looks lower in dollar terms in the blockchain's Ether token. Yeah, of course. Because if you're not like, if it's not being used, then why do you need it? Like that's it's becoming more and more clear that hodling and holding is having a negative impact on cryptocurrency. What is the point of having something if it doesn't need to be used? There is 0 point in it. Zero. None. If you can't use it, then you don't need it. And if you don't need it, you're not going to buy it. And if you're not going to buy it, then the price is going to go down. This idea that you're just going to buy a digital currency and never use it and it's going to go up in price is the dumbest thing anybody's ever thought was a good idea. Ethereum activated the Pectra upgrade on May 7th. The update aims to streamline staking, enhance wallet functionality, and improve overall efficiency. Pectra makes the ETH token in Ethereum itself more appealing to institutions. Like we already said that earlier. We knew that. The bank said it distinguishes the network from competitors, but the upgrades haven't boosted activity in any meaningful way. The bank noted that following the Dencun upgrade, both average and total fees fell, in part because of a shift towards layer 2 chains. Ether's circulating supply also increased after Dencun, which raised concerns about the crypto becoming an inflationary asset amid subdued transaction activity, JP Morgan said. Futures positioning suggests that institutions played a large role in the recent rally in Ether, the report added. Ether had risen more than 45% in the past month, CoinDesk data shows. Has yet to break its all-time high from the previous cycle, in case anybody. So data shows. So data shows still hasn't broke the all-time high of the previous cycle. Dear Lord. So I thought this would be interesting. Cointelegraph is telling us how to mine Bitcoin at home. And you guys know I'm going to get mad already, huh? Home mining is how I started, being successful with this YouTube channel. It was primarily due to, I told the story a million times, the RX 470. I was doing a tech review of it, GPU benchmarking for video games, and comparing it to, at the time, I believe it was the GTX 1063 gig. And at the end of testing, I went to look up the prices, and the price of the RX 470 was extremely high. And I was like, this makes no sense. It was $200 like when I got it. So what's going on? Come to find out, it was from Ethereum mining, and I work in IT. At the time, I was a cloud solution specialist. Effectively, for those that want to know, I primarily worked in Azure cloud and Office 365, primarily doing exchange migrations from on-prem to the cloud, on-prem standing for on-premise. And so I had enough IT experience to kind of figure out, running batch scripts, all that sort of stuff. And I was like, I could show people how to do it. So I showed people how to do it. And that's how we ended up with a YouTube channel, right? That has whatever subscribers we're at now. And so home mining is near and dear to me. I'm not even really mining out of my home other than I have we have a land set up now, so they can mine. I was working on ADD. I was working on some scripting for when they're idle and stuff, and being able to push scripts to mine on them when they're not gaming. So outside of stuff like that, right? But by and large, I don't have a big, a whole room full like I used to. So I like home mining. It's near and dear to me. I thought it'd be interesting to see what they say you need to do. And obviously they say this is so you can discover how to mine from your home in 2025. And right away, I read the key takeaways and I was like, rage. So the first one is lottery mining is cheap and fun, but don't count on hitting a block. Obviously, I'm anti-lotto mining in general. I don't think that it's a good practice. I built this channel on real numbers, actual revenue, generating real revenue, treating crypto mining in the home like a business. If you aren't going to be doing that, I don't see the point in doing it. Go buy a lotto ticket. I think it's stupid. Now, are there other purposes for those lotto miners that are relevant? Yes. So mining things like Digibyte, right? Or other cryptocurrencies, speculative mining SHA-256 releases that you see on mining pool stats. There's some uses for them, okay? I'm not going to poo-poo over the entire design or anything like that. There have been cool things that have come out of it. I think that you can find uses for them. I don't think lotto mining is a good idea. So it does say solo ASIC mining. It's a long odds game. If you're, once again, it depends on what you're mining. If you're going to say, buy an S19 and solo mine with it, I'm going to say that's almost the equivalent of a lottery miner and say, probably don't do it, right? That being said, if you're going to buy an S19 Pro and you're going to load firmware on it and then you're going to solo mine Bitcoin Cash, well, then maybe it makes a little bit more sense, right? But your goal as a miner should be to stabilize your revenue so that you can actually treat it as a business, even if it's as low as buying a single S19 Pro, finding energy cost or a host that will make it profitable, throwing it in there, and maybe it makes 50 cents a day. At least you're doing something. And that's going to train you in the ways of, all the greats, which would tell you invest in assets, not liabilities. And it's a cheaper way to do that, right? That was the appealing thing about crypto mining to me from the very get-go. Was I was definitely into Rich Dad, Poor Dad, that sort of self-help type stuff. I thought it was interesting that it was an asset that I could actually afford and generate revenue with, and it offered good practice, right? That's what it did. So throughout 2024 and 2025, you've seen a whirlwind of institutional investment from companies like Strategy, which continues to aggressively accumulate Bitcoin. And Metaplanet, Japan's listed company that recently adopted Bitcoin as a treasury reserve asset. Moreover, on the regulatory front, the return of President Donald Trump administration signals a friendlier stance towards crypto, with talk of rolling back SEC overreach and possibly supporting US-based mining. Across the Atlantic, regulation has gone into effect in the EU, offering clear guidelines and reducing regulatory uncertainty for retail investors and miners alike. Then there's the price. Bitcoin finally broke the $100,000 resistance level in early 2025 following a post having supply shock and increased ETF-driven demand. I don't think ETFs are a positive impact. I think they're having a negative impact. So as institutions pour in and supply tightens, more individuals are reevaluating how to get involved. So they give us all these options. I don't think we need to really cover them. Like, obviously it's going to promote the bid axe. I think everybody here is aware of the bid axe. Every KOL in crypto mining and their dog has covered it. I don't think I need to cover them. You should be aware of what they are. They're typically little single ASIC chip on a small PCB with some form of tiny cooling. And you point it at like a solo.ck pool is pretty much what they're doing. And then you see if you'll, get lucky and hit it like a scratch off ticket. I think investing in these, the problem is it puts you in the right. I'm going to say it this way. The problem is it puts you in a bad mindset, which is a gambling mindset. And when you get into that mindset, you are potentially going to it's going to affect you everywhere else in your life. Like if you keep buying them and all you're doing is like you're consuming and you're not producing, right? Effectively. You have the chance of potentially producing one time. And that mindset, unfortunately, I think is going to get you kind of chasing that dragon. There is a problem in crypto that is more apparent like in meme coin trading. And I think it's a big problem overall though. But it's this idea that like, oh, well, on the next thing or the next thing or the next thing, or I failed here, but I'm just going to keep running this solo miner and maybe it will hit. And oh, well, there's a new solo miner that has better efficiency. Let me drop another 300 on that new one. And you're just chasing that dragon. And I don't honestly, I think it's bad. Like, I think it's bad for everyone involved. I think that it has a negative mental impact on you. And I don't think that it's a good idea. That's how I feel about it. And that's just coming from my own understanding of myself and the way that I function too. Like, it's definitely been like, I don't know. Everyone remembers being like 18 and buying way too many lotto tickets at one point or something, right? Where you're like, I'll just buy another scratch off. I'm at the gas station. And then before you know it, you spent, $100 that week on scratch offs and you won two, like that is effectively what buying these are. And so I don't like that they're promoting that as home mining. It is what it is, right? So if lottery mining is like buying a single ticket and hoping for a lucky break, solo mining with an ASIC is showing up with a small stack, your chances improve. I think this is ultimately the same thing at the end of the day. I don't think solo mining is good. Also, running one of these, there's a lot of problems here, right? So this is for home mining. So from the home mining perspective, buying an S19 is going to be very loud. You could buy some fog hashing single units, which I guess, spend another, $1,000 on that setup. It is kind of weird that they say you could get a high-end model like the S21 Pro or Hydro delivered, but anybody in the know knows that's a bad suggestion because the S21 Hydro has proprietary hookups for liquid cooling. Now, there are options and packages you can buy, third party that'll allow you to run that at the home and be quieter. Sure. But then you're going to have to worry about additional points of failure, etc. I don't feel like this was written by anybody that's actually done any of this before. That's my 2 cents on this, right? And then they go through if you run one S21 Hydro, which you're not running at home, more than likely. I mean, yes, like I said, you can, the real nerds have like obviously options to run them at home, and it's been done, but it's not like you're gonna like, I don't know why you would recommend this to people that have never mined before, I guess is what I'm saying. But it's like you'll have a 1 in 8.6 billion chance of finding a block with one S21 Hydro. Which, by the way, like if we go to, let's go to hashrate.no, and we go to A6, we're already on S23s. It's getting crazy. So an S21 Hydro on a pool is going to net you like almost $8 a day. So if you're mining on an S20, like the suggestion should be put it on a pool and make $8 a day. Like, what is that, right? So let's say 8 times 365. That's $2,920 a year in profit. That's what they should be suggesting, not solo mining with the damn thing. It's crazy. So a DIY ASIC mining setup. This article doesn't cover... Oh my God, it gets worse. Right? You guys saw that, didn't you? It doesn't cover GPU mining, CPU mining, or FPGA, which are all better options for home mining, right? From an infrastructure perspective. And then, of course, it suggests cloud mining. So cloud mining lets you rent hash power from a remote provider who runs the hardware on your behalf, and you don't have to manage the equipment, deal with the heater noise, or blah, blah, blah. You buy a contract, and if all goes well, you receive a portion of the mining rewards. 9 times out of 10, this has not been positive. So there are like 2 places where you could do cloud mining that kind of makes sense, right? Like NiceHash or mining rig rentals. The problem with those is like they are so competitive with the market that your margins aren't very high, right? And then if you find one that has high margins, well, that's less of a good thing and more of a red flag. So with cloud mining in particular, like the higher the margins or the return, the more likely you're getting scammed at some point, right? So I think it's very impactful to negatively, I think, on the perspective of mining in general, because the thing is like every cloud mining platform that has come up in the past, right, has ended up collapsing. So this is a new trend I've been noticing a lot lately, and I think it's going to go down a bad path like it has in the past, but maybe there'll be one or two good ones out there. I wouldn't recommend it at this time. Like I said, in the past, I've seen these fail a lot. Holding your coin, holding your contract payments, not mining, stealing hash power is a big common one. It's just not advisable at this time, right? So let's talk. Well, this was supposed to go over here. Yeah, it doesn't matter. We had already talked about like all the investments going on. The idea, it was just a reiteration. I'm not going to read this article, but it's just talking about GameStop getting into owning Bitcoin. It's just a reiteration of the trend of, institutional money coming in and purchasing a bunch of Bitcoin to hold it and make money off of it. I've already ranted about this today, so we'll kind of skip over it. This is just, I find the sources to support my theories, and this is just one of those sources to support that theory. Now, let's talk about the BC250. Let me see if I can get this going here. Boop, 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 boop. The Bluetooth might not be strong enough. Let's see. I did prep this up. I'm trying to connect the controller to it. So this screen behind you is a BC250. Oh. We'll just use the Bluetooth mouse and keyboard here. And so what I've been able to do is effectively, I say that, I can't even get the mouse working now. No! I wonder if it's frozen. Let me do this. I left it here, but I didn't check and make sure the adapters were working. And there's a couple cool things. It'll boot up in a second. I need to get this up too. So, no, Ozzy. So effectively the BC250 can now run SteamOS. And if you use the Bazite image with the latest Fedora, the drivers are baked into the kernel at this point. And the other thing that you have to do, and this would be helpful for mining as well. I haven't got to testing it, but there's a BC250 version 3 cracked ROM available now that you can effectively change the amount of, one, it increases the CPU performance. So prior to the crack, the CPU performance was locked at like 1.5 gigahertz. And so the CPU mining has been improved significantly with this ROM. And the other thing that you can do is you can adjust the amount of memory allocated to the system versus the GPU, right? Which again, should also effectively help improve mining performance. So these should be mining CPU coins better. I haven't got to fully testing. I was working on it this week, but like I said, this is as far as I've gotten. And there we go. Okay, I guess the screen had just frozen, but we're good now. Let me pop this out for me. Projector, source, that's not the right one. Projector, source, there we go. So I can see. And, oh, as soon as I did that, I broke it, didn't I? There we go. So if we go to, there's a ton of lag right now. It's because I need to like point this over there. So we go to settings and system. So basically we're on Bazite 42. So from Fedora, it's the Fedora Atomic to be clear. You just update it and it will read everything, right? So you can see the CPU is the BC250. Our CPU frequency is at 3.1 gigahertz. We have 12 logical cores. And right now I have it configured. This is apparently the best for gaming right now, which gives us RAM, 14 gigs of RAM and almost 6 gigs of video memory. So really good for 1080p. And you can see here the video driver, and it does actually read the graphics card. So we've gotten the BC250s effectively running video games. I think this one's already pre-compiled. I was testing some different games. And this is the Oblivion. We'll do the cloud save so I don't F my game up. I have No, I have a lot of cases. No, it's going to process shaders. It's probably going to take a while. Yeah, so I have like 10 cases of BC250s. So some of the things I'm testing, like obviously I wanted to test the gaming first because one of the big things I think that these offer is obviously we had that Mexican YouTuber come out with obviously building these machines. He was just playing on Linux. I figured out how to make it Steam OS, so just like a Steam Deck. And I think repurposing this equipment, it's a really neat idea for emulation. It does play, you know, AAA games pretty well. We'll see if it proves me wrong. You can see up in the top left all the performance. I just have 240 or 120 millimeter fan set on top of it, so I'm working on some cooling. But oops, I hit the keyboard. But this is Oblivion remastered. There are some BIOSes that unlock more stuff. It's not running very well right now. I need to see why. I was making some changes to it the other day, and maybe I effed it up. I had this running at like 60 frames. It's also hard because I'm not running pass-through right now. Outside's going to be rough, but we'll mess with the settings. I think it copied all the settings from my other system. But I'm going to work on a full video with the crack, and then we'll see where it'll go. It looks like the CPU's running a little slow right now. No, we crashed it. Well, I'm going to have to see what's going on. Anyway, it was running great before the stream. I think I left it up too long and something weird happened. I did run some things trying to like install a new Bluetooth driver. So I assume there's the startup splash screen. So I assume something with that is going on. Anyways, so I'll test some mining stuff. The BIOS I have linked to you guys, but let me link it to you guys over here. It's from Penguin. It is a gaming BIOS. And then the setting, I'll unplug it and show you guys the setting here too real quick. I booted the game, but we'll do this real quick for you guys. So when you do the BIOS flash, to get into the BIOS, you can't, there's not like a, yeah, there we go. Okay, it's fixed. You can tell because the CPU's at 3486. I don't know why it was gimping there for a second. We'll have to see if there's like, I think it's heat, actually, probably. Yeah. I have to, still working on figuring out cooling. That's better. So I cannot play uninverted. What was I going to say? Oh, so to get the BIOS to load, you have to disable you have to uninstall the hard drive. And then the BIOS will load up. Get naked. Repair. Let's see what settings this is on. I have a feeling it boosted them. Yeah. Oh. Well, that's the problem, boys. It's running at 4K. Let's fix that. Problem solved. There we go. Now we're locked at 60. Yeah, it's a PlayStation 5 cut down, so it's not gonna. It'll run 4K probably with FSR and stuff, because that was actually pretty good 4K performance. I was like, what's going on? It's because I plugged it into the 4K Elgato. But there we go. Anyways, super cool. As you can see, all the CPUs show up now. They're clocked at 3.5 gigahertz, so we should get better mining performance. The GPU's clocked at 1500, no way to really adjust that. And then the video memory, it's using 4.4 gigabytes right now. It's using 9.8 gigabytes of RAM. But that's what I was working on with the BC250s lately. And then, take all my stuff back. I'll get some more testing done. The first thing I wanted to do is get the gaming stuff done. And then I am selling it already pre-cracked and stuff. If you guys don't want to crack it yourself, that's fine. And you got to use AMD VB flash. Raw. Let's go outside and see what it looks like. Should be better now. I gotta fix the, what's the other thing? Yeah, it reset everything. Oh, come on. Oh, that's keyboard and mouse, that's why. There we go. So 4K definitely is a no-go on these without scaling. Yeah, I'll make a how-to. You do have to crack the BIOS and set the GPU, otherwise a lot of games won't run. Because the default 3.0 BIOS only gives the system memory 8. So looks like in the town, or sorry, outside, we dip a little bit below 60. But, you know, Unreal Engine 5, high settings, 1080p, it looks really good. And then the GPU's around 77 degrees Celsius and the CPU's around 84. And then it just acts like a console, you know. There is a game mode. Or a desktop mode as well. And it's just KDE Fedora. That's what I've been working on as far as that's concerned. Close that out. And I'll get to testing on, I used AMD VB Flash to flash the BIOS, in case you're wondering. So you just flash a USB drive into bootable DOS, copy and paste AMD VB Flash and the BIOS onto there, and then you can run, you know, a provided script from VB Flash, or you can create your own script to flash it, and I'll work on a tutorial. And then I did put them up for sale on eBay, the cracked version. I haven't sold any yet, but I don't have like a good eBay account, so it is what it is. I have like 0 reviews on my eBay account. Yeah. And then today I wanted to talk about, well, let me check the time. I gotta go. I have a lot more I want to cover, guys. I wanted to do the reaction to Rabid, and I wanted to do a WTF is Tenzura, but I gotta go pick up the kiddos. So I'm going to do that. I started work again on last Friday or last Thursday. So I'm working the full-time job again. Hence why we ended up rolling onto a Saturday morning for the live stream. I don't know. I want to get back to streaming as much as possible. But I got a lot of work to catch up on. So let me catch up on a lot of work. I went back and I was like, so what got done? They were like, well, you said we'll just wait on you. I was like, I was gone 2 months. You waited on me for everything? Oh, thank you. So I have a lot of work to get done. So just bear with me while I catch up at work, and then we'll start catching up on the channel again too. I'll work on the guide. I already have like a whole box of 12 of these here. So the guide I should be able to get done. TP-Link Bluetooth works out of the box. These little Logitech wireless keyboard and mouse work out of the box with it. I'm waiting on a Wi-Fi adapter, so I'll let you guys know when the Wi-Fi adapter comes, which one works exactly. And then I've just been getting these little $37 500 gigabyte Team Group hard drives. And these work fine. So that's it. Thanks for hanging out, guys. I'll see you next Tuesday. I might stream a little bit tomorrow and catch up on some more stuff too. But I'll see you next Tuesday. Adios.